Is something happening to Google's dominance? For 2 decades, it enjoyed one of the best business models in history, search. It combined wildly successful acquisitions of YouTube, AdSense, and DoubleClick with billion-user franchises like Gmail and Google Maps. The stock nearly tripled from 2020 to 2021. It was a Wall Street darling. And yet today, Google may be finding the previously rock-solid ground shifting. ChatGPT and the pace of new AI-driven products from Microsoft seem to come out of nowhere, putting Alphabet on the back foot. The company that's been talking about AI for years all of a sudden looks defensive. Pair that with the mood of cost-cutting and profitability per employee focus in Silicon Valley, and you gotta wonder, are there serious problems brewing for Sundar Pichai and the Google franchise? That is the subject of this week's TechCheck Weekly. Is Google's dominance cracking? This week started with a blockbuster New York Times article that Samsung had considered ditching Google for Bing, just considered it.
I'm sure there's lots of folks talking about this. I think obviously the Android ecosystem is very important for the company as well as the search.
And that was enough to knock Alphabet's share price down by nearly 4%. Why? Google pays billions of dollars to companies like Samsung and Apple to make Google the default search engine on those devices, but it's also the default for a reason. Google emerged from the search engine wars of the 90s to become synonymous with search. Remember Ask Jeeves and AltaVista? It's okay if you don't, because Google relegated them to mere Wikipedia entries.
Google pays Mozilla, for example, the Firefox web browser, tons of money to be the default search engine, pays Apple, again, reportedly $20 billion a year.
Microsoft would have to be willing to pay lots of money to Samsung to be the default search engine. When it was just Bing, a very small piece of Microsoft's business, why pay up? But now that Microsoft has developed ChatGPT and integrated it with Bing, overnight, a formidable competitor was born. Satya Nadella has said he, quote, wants to make Google dance, but he is also facing a major uphill battle. Google accounts for more than 96% of the global search engine mobile market share.
By the way, the trends show people are not moving to Bing at all. I mean, there is no loss, but these are real competitive threats.
But still, according to the New York Times, this mere consideration by Samsung was enough to set off a panic within Google. So why panic with a near monopoly on search? Because that moat is crucial, so crucial that Google spends billions of dollars to maintain it. And it's the moat that Google's Android operating system also helps to maintain. Android makes up more than 70% of global mobile operating systems, the OS of choice for basically any phone that is not an iPhone. It has a giant presence even without actual Google hardware. Despite the proliferation of many other businesses at Alphabet over the years, Pixel devices, cloud computing, self-driving cars, and other moonshots, search remains Google's bread and butter. It is Alphabet's largest business, and it has a profitability that other tech and software companies could only dream of. Search revenue comes from the ads that appear below a search result, along with other smaller search ads, like the ones that appear in Gmail, Maps, and the Play Store. Last year, Google generated $149 billion from this business. So any threat to its search dominance has huge implications for Google's core business model and what it has used to fund all of its other bets, businesses, and acquisitions over the years. If we play this out on the Apple side, Apple collects a rumored $20 billion a year from Google for Google to be the default search engine on iPhones. That deal is reportedly up for renewal this year. So would Microsoft be willing to outbid Google? Well, that depends on how aggressive Satya Nadella wants to be, but Google will have more competition for that deal than it ever has. The vulnerability lies in ChatGPT. Earlier this year, Sam Altman's OpenAI shocked the world, introducing a chatbot that could have realistic, human-like conversations, despite bugs and bizarre answers and even sometimes straight-up misinformation. Or perhaps because of those quirks in articles and the think pieces they spawned, ChatGPT went viral. Microsoft quickly claimed OpenAI for its own with a $10 billion investment and immediately integrated it into Bing Search and Microsoft Office products like Teams.
People are questioning whether Google is truly the leader in AI.
And now the big worry for Google comes down to this. Will we go to ChatGPT for our search queries in the future? The simple ones, like how many teaspoons are in a tablespoon, when is Easter this year? But what about the more commercial questions too that are currently so profitable for Google? Like, how do I book flights to Rome? Where do I find the best handsaw? What are some recipes for overnight oats?
This is potentially able to cannibalize the traditional search as we know it, getting quick answers, getting something that's a bit more conversational. And so this impacts Google's core business.
Instead, investors are wondering if users will go to ChatGPT for these questions and get better laid out custom answers that totally bypass Google and thus see people operate outside of the Google ecosystem. Google, meanwhile, isn't taking this threat lying down. Google has launched its own ChatGPT competitor called Bard, and it has promised that more efforts are incoming. But it's putting caution and responsibility ahead of speed and flash. Meanwhile, Meta, Nvidia, and Adobe, smaller companies like Midjourney that has just 10 employees, they are releasing their own generative AI-driven products with similar features, some chatbots, some with more complex text-to-picture engines. Now, there is a caveat to all of these headlines and panic and skepticism. That is Google's stock price. Since the start of the year, Google and Microsoft have moved in tandem, and it can hardly be argued that Microsoft has taken an edge on any of its AI competitors. All big tech companies have different areas of competition with each other, whether that's in their advertising businesses, cloud, operating systems, device sales, and in each of those businesses, sometimes they compete, sometimes they even support each other. What cannot be disputed is that Microsoft, through its investment in OpenAI, opened a new front in the competition and sparked a flurry of investment and product releases that big tech has not seen in years, especially in terms of shipping fun, sticky consumer products that people seem to actually enjoy playing with, in contrast to the countless blockchain and metaverse and Web3 projects that failed to gain any traction. But the market, which Warren Buffett calls a weighing machine in the long term, has hardly given up on Google. The fact that both stocks have moved by the same amount this year signals that the race has only begun and is far from decided. Another brokerage firm, Piper, just listed its top AI all-star teams, and Alphabet is right there at the top. But there's also the shorter term. The dawn of this technological revolution that some have said will be more consequential than the switch to mobile comes at a tricky moment in the economic cycle for tech companies. When the Fed started raising rates and everyone started to worry about a possible recession, the tech trade shifted abruptly. 2022 was the year of the pullback in terms of share price and then the cutback in terms of employees and investments. Almost every tech company has reduced headcount. Advertising-dependent companies were some of the first to feel the hit as companies pulled back on marketing spend in the face of that economic uncertainty. Alphabet attempted to weather the storm, but eventually announced its largest layoffs in history and cut back spending on some of its more expensive bets. The drive for efficiency and better profitability comes right as the battle for AI is intensifying. And that paradox will continue to play out as Wall Street demands both better profitability and a Google that can still innovate and compete.